So Bitcoin just broke below $60,000 today, and this time we actually undercut the previous low by $100 or so. Not by much, but it does count. Bitcoin put in a fresh lower low. We're currently sitting at around 60,600 though as I'm recording this, and we're probably about to print the lowest daily close that we've seen in 2 years. And so we're now trading below the 200-week moving average, which sits at about $62,000. And if you're watching the charts right now, it doesn't feel good. So I'm going to be honest with you right out the gate. I'm still DCAing Bitcoin, and I want to show you exactly why using the on-chain data today in this video. Because on Bitcoin, unlike almost any other asset, you can see the actual order book of the entire network. You can see at every single price, how many real coins last changed changed hands there, where people actually moved coins at. And that chart basically called this exact move. A couple of weeks ago, I'd have told you we were sitting at on solid support, at around $60,000 to $65,000 with a big empty zone underneath it. And so, we have fell into that zone. So today I do want to talk to you and walk you through about where we are now and where the next real floor, in my opinion, is, and then answer, with 16 years of Bitcoin's historical data, whether you should keep buying here or sit in cash and wait for lower, because I've got a strong opinion on that and the data sort of backs it up. So before I get into the on-chain data, I do want to address the thing that I know is freaking everybody out right now, because it's all over my feed, and it's a big part of why this recent drop feels so heavy, and that's MicroStrategy. Michael Saylor's company. The stock just hit a new 2-year low. It's down something like 80% from its peak. It broke below $100 for the first time since early 2024, and everywhere you look, basically people are calling it an implosion. The next FTX, a black swan that's going to take Bitcoin down with it. And I want to be really direct with you about this, because how I see it is, because I've said this before and I'll say it again, MicroStrategy is not Bitcoin. What's happening to that company is sort of a leverage problem and a financing problem. It's not a Bitcoin problem. And their whole model sort of worked when their stock traded at a premium to the Bitcoin they hold, so they could keep issuing shares and buying more Bitcoin. And so that premium is now gone, right? The stock now trades at a discount to its own Bitcoin, right? The MNAV. So their dividend obligations have ballooned, to over $1 billion now a year. And so their preferred shares are basically trading below par. And so the machine that they were sort of using, the financial machine they're sort of using to buy Bitcoin has basically stalled out. And so that's a corporate structure, sort of straining under its own debt. That's not the Bitcoin network failing, right? The network is doing exactly what it's done and it's always done. A block roughly every 10 minutes, not skipping a beat, through any of all this stuff that's happening. And so the part that I really want you to sort of think about is this, right? Because some people, get it backwards, right? Bitcoin does not need MicroStrategy. It's the other way around. Bitcoin ran just fine for 15 years before Saylor even bought a single coin, right? And so it would keep running just fine if every treasury company on earth vanished tomorrow, right? MicroStrategy is a leveraged bet on Bitcoin. Bitcoin is not a bet on MicroStrategy. The dependency only runs one way, one direction. And so, the real risk here is if MicroStrategy gets pushed into selling its Bitcoin to cover these obligations that it has. And, that would be real supply hitting the market. And yeah, that would push the price lower in the short term, maybe even straight down into the air gap that I'm going to talk about today. And so yeah, but notice what that actually is, right? That's a price event. That's not Bitcoin breaking, right? So the real question is MicroStrategy okay? The real question is what the actual Bitcoin network is doing underneath all the noise that we're seeing lately. And And that's the whole point of on-chain data. It lets you see, into why things are happening. So let's look into it. This is the URPD, the UTXO realized price distribution. All it's basically showing is how many coins last moved at each price, right? So green is coins sitting in profit, and red is coins sitting underwater, and we're right at the line between them, around $60,000 right now. I think this hasn't been updated in a bit, but an hour ago Bitcoin was at 59,500, so it was accurate an hour ago. So basically, there's two things I want you to notice here, and then we can sort of move on from this chart. First, if you just look above us, right, all that red from 60,000 all the way up to $70,000 is freshly underwater. So which means those buyers turn into sellers on the way back up if Bitcoin goes to those overhead resistance levels. And the single biggest block of trapped coins is way at $85,000. A whole group of people who bought up there and are now deep in the red. Secondly, if you look down below on the left side of the chart, it thins out really fast. The supply thins out pretty fast. There isn't really much real support stacked up underneath us through the 50s. And so that thin patch of, from $60,000 all the way to like $30,000, $40,000 here is like what we can call an air gap, right? So the chart's sort of message here is actually really simple, and then we can sort of leave this one. You have support, down here at around $60,000, right? And it's pretty thin right up until you drop into around $40,000. And in that zone, in the low 50s, that zone there is the real conversation that we can talk about. So the levels that actually matter, because honestly, this is the part I care about most, is if you pull up the on-chain price levels, the on-chain cost basis models, which are basically just the average price different groups of people actually paid, only a handful of them actually mean anything. And if we look at them, we start with the ones above us, the short-term holder cost basis. This is basically the average cost basis of everyone who bought in the last few months, last 5 months is sitting on. That's about $70,000, $71,000 right now, which is basically the cost basis of all these shorter term speculative buyers, right? If you look above that, that's around $77,000. That's the true market mean, which is basically the cost basis of the actively moved coins. And so we're about 22% below the true market mean right now. So sit with what that sort of means for a second. Everyone who bought recently at the short-term holder cost basis, they're trading well below what the average market paid, right? We're sitting at around $60,000, and the average short-term buyer is at $70,000. So they're in loss, by about 15 to 16%. And so the levels below us, the realized price, which is the average cost basis of the entire network, every single coin out there, right, sits at around 53,300. And so we're about 12% above it right now. And just underneath that, you get a whole stack of, deeper floor models bunched together. You have the long-term holder realized price. You have the CVDD at around $49,000. You have the investor price at around $49,000 as well. So you have 4 of the most important cost basis levels in the entire market, all packed into, that $54,000 to $50,000 level. That's a dense, cluster of sort of support that we're seeing for Bitcoin now. And those lines are real average prices that real groups of people, have paid for their coins. And when the price historically has fallen to those levels, that's where the entire network's average cost basis basically sits, right? That's historically where the selling sort of burns itself out, because below these levels, are more and more holders becoming underwater. And so the people who are still hanging on at those lower levels tend to be the ones who will flat out, not sell at all, right? So the supply that is sort of up for sale sort of dries out around these levels, right? We've seen that in 2019, 2018, in 2022. We also saw it, in 2015 and in 2011 as well. So I want to be straight with you, about where we actually are right now, because I'm not gonna. I personally don't want to sell you, the narrative that a clean bottom has confirmed just yet, because we haven't yet reached down into these lower levels yet, but that doesn't mean we necessarily have to reach those levels, right? On the valuation side, if we look at the MVRV Z score, it's around 0.2 right now, which is pretty undervalued. If you look at the Nupal, that's reading as hope right now, which sort of measures the how much of the actual network is an unrealized profit. That's sitting at around 0.1. That's in a band that's literally called hope. The zone you only ever see in sort of late stage bear markets, and the mood is matching that right now, right? So the fear and greed index, if we look at that, that's at around 17 right now. So by valuation metrics, by most valuation metrics, and by sentiment metrics, this is a deep value, deep late bear market territory for Bitcoin. There's no question about that. Being below the 200-week moving average is also an indication of that. But the honest, part of that is that this is not, necessarily a textbook capitulation bottom, right? Because we haven't yet reached the realized price. And so I do want to give you one caveat that, I always give, and I actually mean it. Every single cycle, these sort of drawdowns for Bitcoin have come in lower than the one before. So I'm not promising you that we'll hit the same depth of the prior market cycle bottom that we've hit in the past, right? If we look at the price that we've seen Bitcoin draw down from the realized price in 2022 is around 25%. In 2017, 2018, we dropped below the realized price at around 30% below it. In 2015, we dropped below it around 45%. In 2011, we dropped below it around 65%. So you can clearly see that, similar to how we've seen diminishing returns for Bitcoin, we've also seen diminishing losses in terms of how low we'll go below the realized price. So in 2011, it was 65% below. In 2015, it was 45% below. In 2018, it was only 30% below. And in 2022, it was only 25% below. So we could very well bottom shallower this time for Bitcoin, or we could just grind down sideways here for a while. And that sort of uncertainty, the fact that we might never get a clean lower low, is the whole reason why I approach buying the way I do. DCAing below the true market mean, below the 200-week moving average, which brings me the question. Brings me to the question which everyone is always asking, right? And the question is this, right? If there's a real cluster of support down in the low 50s, then the obvious move sounds like, okay, I'll just wait, I'll keep my cash, and then I'll buy at say $53,000. If we get there, get the discount, buy the lower price. And I want to take that view seriously, because it sounds intelligent, it sounds smart, and a lot of people are doing that right now. So sort of, instead of giving you my opinion, if we look at the average drawdown below the realized price, you can clearly see that it's diminished, right? 65%, 45%, 30%, and 25%. This cycle, if we say go below 10% below the realized price, that would line up to around $50,000. And so, I do think, while, we've seen it, tag the lower price levels in the past, I don't necessarily think you have to go that low in order for Bitcoin to bottom. And so the cost of sort of making that bet is lopsided, right? Best case, if you wait and you nail it, the realized price is only 12% below us, and that shrinks every time we drop. But in the third of the time, like 60% of the time, the likelihood of us reaching that level as Bitcoin continues to mature and as Bitcoin becomes a bigger asset, the likelihood of us going there in upcoming cycles is going to halve every single time, right? So I want to show you one more chart today, and that's the supply and profit and loss. It's basically showing you the percentage of all coins in profit versus the percentage of all coins in loss. simple as that. And people often forget this chart exists. And right now, the supply and profit and loss is sitting at around 46%, 46% in profit, and then 54% in loss. And so these two lines have converged once again. For the most of the last 2 years, these two lines have, most of the network was sitting in profit, right? And the supply and profit was sitting at around 90 to 80 to 90%, all throughout this bull market. But now more than half of all these coins, that exist in Bitcoin's network are underwater, right? And the price is still, above the network's average cost basis, above the realized price. And yet a majority of these coins are already in the red, right? How does that happen? It happens because, so much of the supply got bought in the high, 70s to 80s and 90s that by sheer count, more than half of the network is now underwater. And even while all of those, cheap and ancient coins drag the average cost basis down to around $53,000, the distribution itself is already telling you that this is late stage bear market, right? If we look at prior market cycle bottoms, typically we only spend around a month or like 2 to 6 weeks below the supply and profit and loss being below 50%, right? In 2011, we saw it converge for around a couple of weeks or so. In 2016 was the longest we saw it converge, around 2 or 3 months. In 2019, it was around a month in total. In 2021, I think it was around 3 weeks. And right now we've only spent around 12, I think it was 11 days or so with the supply and profit and loss converge, right? And so, this kind of flip where the network sort of goes from mostly in profit to mostly in loss has really only happened at the deep point of, these past bear markets in 2018, 2019, 2022, the bottoming zones. Obviously, this isn't a precise timing tool, but it is one of the, the pieces of the picture of the puzzle that, we want to see for Bitcoin to bottom. And so the profit for Bitcoin is already gone, right? And the pain is already here. And historically, that's the zone you want to be accumulating in, not running from, right? So I think it sort of helps to sort of give you guys a plan instead of, just my opinion, right? The levels say that there's a thin air gap between where we are right now and where we've historically seen Bitcoin bottom. The valuation metrics like the MVRV Z-score, Nupal, the on-chain risk metrics are saying we are in, an undervalued territory and we're in extreme fear, obviously. The supply and profit and loss has already converged and, most of the network is underwater just like prior bottoms. And I think, none of that is a reason to necessarily panic and none of it is a reason to also freeze, right? In my opinion, it's a sign that, a lower low isn't a reason to stop buying, right? For someone accumulating long term, it's the opposite, right? We just get handed cheaper coins, right? And I would much rather end up with an average cost basis, of $65,000 or $70,000 from steadily buying these dips rather than chase, a lower average just by sitting in cash and then risk us never going low enough and me never buying at all, right? That's the real trap. It's not buying a little too high. It's freezing, waiting for a perfect price that never happens and watching the whole, market recover without you, which yes, it does take time to recover, but what are we investing for, right? To keep wealth and to grow it. This isn't a get rich quick scheme, and a $60,000 average cost basis that I actually own beats a $55,000, $50,000 average that only exists in my head because I was too scared to pull the trigger, right? And look, right, we're well below the 200-week moving average, and I don't say that lightly. The only times that in Bitcoin's entire history that's happened has been in the deepest part of bear markets. The moments in hindsight that turned out to be the best long-term entries that anybody ever got. So, personally, I don't try to time, the levels exactly. I just buy a little bit, on a schedule all the way down through these lower zones, and I'll keep buying, below 50 into the low 50s if we get there, right? My average drops down, and if we never do drop below the low 50s, I already own a decent amount of stacks, a decent stack of Bitcoin down at these lower levels, right? So if the MicroStrategy thing does end up forcing some extra selling and it shoves us a little bit lower, honestly, that's fine, right? That's not the network itself breaking. That's not Bitcoin itself breaking. That's just the price doing what it might do. And, it's me getting closer to cheaper coins. And so, that's it really. Read these lower levels, watch the supply and profit and loss. In my opinion, that's one of the most accurate metrics for Bitcoin's bottom. Thank you guys for watching. I'll see you next one. Bye.